Hey traders, this is Blake Morrow with Trader Summit. With me today, I have Mr. Boris Schlossberg from 60-Second Investor. Good to see you.
Hey, good to see you, my friend.
Yeah, it's been, I want to say it's been a long summer. At least it has been for me because it's been hot here, but you've been traveling and it's good to see you back in the saddle. So what's going on with you?
Oh, it's been great. I was in California for a while. And of course, the inveterate trader that I was, I traded all the way through my vacation and actually discovered that West Coast hours are perfect for day trading the stock index futures. So I was very happy.
That's what they all say until you have to wake up at 3 o'clock consistently. Listen, I know.
But I did it anyway, so I'm very happy. It was no different for me. The only problem was I was really dead by 8 o'clock at night. I was just wasted.
I'm sure. Well, hey, you're coming back at a perfect time because we have the Fed coming up this next week.
Yes.
And, what I wanted to get from you today is what are your thoughts ahead of the Fed? I mean, you look at currencies and you look at stocks. Stocks are still, pretty well bid. Obviously, if you take today, which is September 15th, 2021, stocks are actually up. We bounced from pretty key support. Dollar's holding up well. What are your thoughts going into the Fed, and are they going to change their tune at all?
No, I think the Fed is going to very much stay on script. If they do change the tune, it'll be incredibly mild tilt towards what I would call a soft taper. But I do not think the Fed in any way, shape, or form is going to become alarmist, especially because the latest data is actually confirming their view that most of the inflationary pressures are transitory. Most of them have been supply driven. And as supply comes back on the market, also as demand tapers off, as people sort of, stop the wild spending after the stimulus, all of this balances itself out. Prices start to come back in and contract a little bit. So I think the Fed feels very comfortable in its position. Is definitely not going to deviate from its longer term policy. That in turn, I think, is what's keeping the equity market elevated at this point, because the NASDAQ loves zero money. And at even a 1 basis point rise in yields threatens the NASDAQ. But the Fed is, I think, under no real urgency to do that.
Okay, so you really feel that the Fed's not going to rock the boat at all going into this Fed meeting. And you know what? I have to admit, every time we think that the Fed chairman might be a little bit more hawkish, he really just proves to us how dovish he actually is, and it supports capital markets all the way around. But let me ask you this: what do you think is the trade in the currency market, or what could really get you to be a buyer of dollars or be a seller of dollars? Or is there any other asset that you might be looking, following the Fed?
Well, if the Fed really deviates one way or the other, so let's say if Powell does surprise even modestly by saying, yes, we feel that we have done pretty much all we can on the stimulative front. It is coming time to consider the taper, and we may be looking to begin tapering in the next 3 to 6 months. Any kind of forward guidance that is even just a tiny bit hawkish will be super dollar bullish, and actually quite negative for the equity market, because the dollar is just not expecting any hawkishness out of the Fed. On the other hand, I think if he remains completely uncommittal, that is, he says we really don't have a timeline. We really don't know when we're going to go towards a taper. Right now, the conditions do not merit any change of policy. That may be, mildly dollar bearish. But as I said many times before, we're in a situation where the whole G3 universe, Japan, Europe, and US, are all in extremely stimulative monetary policy posture, because none of those economies can absorb even a mild tightening of monetary policy. On the other hand, the smaller advanced industrialist economies, the Commonwealth countries like New Zealand, Australia, Canada, which are more commodity driven, where there's been a tremendous amount of demand, and for whom the balance of trade and capital accounts, or all of those things matter much more, are actually, I think, relatively more hawkish. Now they've been sidelined because of the Delta variant, and especially, for example, the Bank of the RBNZ, the Reserve Bank of New Zealand, which was really the most hawkish of all of them, has had to pull back on its policy posture. But I think that's going to be perhaps the better trade. The trade is going to be into those dollars relative to the U.S. if the Fed remains dovish. To date, our best trade from the beginning of the year. At the beginning of the year, our currency trade of the year was short Euro Kiwi from around 170, 171. And that's worked beautifully, continues to work. And I still continue to maintain that's a relatively decent trade right now as we go forward.
That's awesome. All right. Well, I wanted to ask you this really quick before I let you go. You now have really started posting. And by the way, for all of us on Trader Summit, we love reading yours and Kathy's, columns that you're putting up on 60-Second Investor, but you're now calling it 60-Second Investor. Tell us a little bit about what you're doing with that.
Yeah, I have really changed my whole research orientation away from the FX market. Kathy kind of carries the ball for us on the FX side. And I have really focused much more on equity and commodities and just basically all other asset classes as potential investment ideas. And I'm constantly seeking stock ideas, index ideas, even commodity ideas as tradable ideas for 60-Second Investor. And as if you visit the website, you can see there are many calls we made over the start of the year that have worked out really well. Short Tesla from 850, a long oil from 45 on the XLEs, and numerous amounts of other trades. For example, even now today, I posted a piece on Chinese internet and how to trade those. One of the things that I'm kind of working on, where I'm using all of my trading knowledge and all of my trading techniques to kind of make investment advice with limited risk and high defined upside that really makes it much easier for investors to maybe double or triple their bets without assuming huge amount of capital risk. So that's what I'm trying to bring to 60-Second Investor. I hope you guys really like it.
We do. I tell you what, I for one are really enjoying it, and I know the rest of the Trader Summit community is really enjoying it as well. So Boris, I want to say welcome home, and glad to have you back. And thank you so much for spending your time with us today.
My pleasure. Thank you so much for inviting me to Trader Summit. Thank you, guys.